Today, I'm going to show you an important tool that you can use for trading that will help you to show you your target points. So you can know where you can put your take profit and also where you would know that, okay, a reversal is likely to happen. Now, listen to me, a reversal is likely to happen. I did not say it's a must for a reversal to happen around that place, okay? But it increases your chances of knowing that this is the point at which a reversal is most likely to happen. And you will also know where to set your take profit point so that you can have the maximum profit that you can get from the market. And this is applied for a trend, for a trending market. You don't just apply it on accumulation. You need a market that is trending and it follows Fibonacci strategy. So it is known as the trend-based Fib extension tool. You can find it on TradingView or any other chart that you are using. They should be having it. So I am using TradingView right now. I am going to show you how to make use of the trend-based Fib extension tool. Now, I need to also tell you some special things that you need to know about this tool. That you are seeing, like this line that you are seeing right now. The lines you are seeing, assume that they are zones. They are not entirely that it must be exactly at that point. It's not a perfect, there's no perfect point on your chart, okay? So if you are targeting a specific point on your chart, it's better you should target a zone. In trading, don't think like things must happen exactly the way you are seeing it. If I'm hoping that price would change here, then it won't be that it must be at the exact spot. It is rather an area. So if I know that around this line now, I'm targeting that when price reaches here, you will target a few area around that side to make it a zone such that if price reaches inside of that zone, you will still regard it that it has reached that your level. So it's not like a perfect line or a perfect point that we are looking out for. We are looking out for zones. That is what I want you to know regarding this tool, and also is applicable in trading. Any area you are looking at, your point of interest is a zone, is not actually a point. Even using trend line, a line itself is not actually the line, is an area, an inclined area. Okay, so in order to use this tool, this is what we are going to be using. So let me delete this first, and then I'll show you how to make use of the tool. So this is the tool that I've applied here, and it will tell me the points that I will be looking out for. But then let me start how to draw the trend-based Fib extension tool. In order to draw the trend-based Fib extension tool, you need a trending market. A trending market is a market that you can predict its direction, is moving in one direction. So as this market that we are seeing, let me draw out my point. You can see this swing high here. So this is a downtrend. So at the start of the move of the downtrend, that is where I will start the drawing from. So you can see price started from this high and then came to this low. Then there was a pullback or a retracement, whichever word that you are using. So a pullback is price pulling backwards. And then from there, it continued the movement to break this low to another point again, to another low. And then there was another pullback again, or you will call it a retracement, as some people call it, like that. And price will keep moving in that direction. Now, in order to use this tool, you are going to pick it. Look at it here, the third one. If you are using TradingView, it is the third row. All the Fibonacci tools are there. So you will click on it. And then the first one you are seeing is Fibonacci retracement tool and trend-based Fib extension tool. Now, I've made a video on the Fibonacci retracement tool. It should appear by your top right-hand corner. You see how to use it as well. It's an important tool that people use for trading. In fact, Fibonacci retracement tool is more common than the trend-based Fib extension tool. The video for the Fibonacci retracement will appear by the top right-hand corner right now. From you click on the trend-based Fib extension tool. So just the way the market is moving, if it is moving in a downtrend, it will start from the top and be going downward. So that is how you are going to be drawing the tool as well. So from this high point where the price initiated the down move, from here you click on it and then you follow the movement like that to this point, this low. You will now click again and then you follow it to the pullback or to the retracement point, this level. Now, in order to know the points that are happening to the right, I have to extend it while maintaining this point. You don't want to go below or above it. You want to maintain where this point is, okay, while extending it so that you can know, because price will be happening forward. So let's extend it forward while maintaining the point of this pullback. So let me extend it for us like that. Perfect. So you now have your trend-based Fib extension tool well drawn. I have drawn it now. So it means price started moving here and then came to this low, then there was a pullback. Now, how will you use it? So just like the Fibonacci retracement tool, this one has specific points you are looking out for. Then the 1%, the 1% point, you are going to look out for it for a possible price reversal. And then another point again is the 1.6, this 1.6. So these 2 points, these are the zones that you will look out for. So even though they are called points, like I earlier said in the video, this is the point you will be looking out for. So you are going to draw rectangle to use it there to draw it. That will tell you that that is the area or the zone that you are looking out for. It's not going to be a perfect line that it must be on this line. So I use rectangles in my own. The same way too, you look out for this one, the one. So you look out for it like that as well. Those are your possible points of price reversal. And then since you have known that price is most likely to reverse at this point, you will use them as your point of take profit. You will use them as your points of take profit. So if you are going to enter around here, Fibonacci retracement will tell you the entry is at the retracement. That is why I'm telling you to go watch the video right now. It should pop up again by the top right-hand corner. So you know that your point of entry is here. You can see where I took the entries. So anytime you enter using the Fibonacci retracement tool, you put your stop loss just a few pips above based on your pattern that you are seeing there, the reversal pattern that you see there, and you target your zone. You target your zone around here, and it could give you risk to reward ratio of 2.58. And since it is a trend, so and is a downtrend, you can as well target. So this will be your TP1, your take profit one, and then you extend it down to your take profit 2. So remember, you entered around here, which means this part has not played out yet. This point has not played out yet. So because it has not played out yet, by the time it reaches here, the way you are seeing it, by the time price reaches here, you will take your first take profit. So if you are risking, let's say $200 on this trade, by the time you have 250, you will take some profits from there. So you can take $150 as your take profit point. Then you will now leave it again to keep playing out. And we can see it retraced back again. So let's see what happened. It retraced back again, and you can see it hit this point, this area. It hit this area again. You can see it. And after it hits the area as our TP2, you will now take your full take profit here. And there was a retracement again. So that is how to use the trend-based Fibonacci extension tool. is very easy. These are just the 2 points that I look out for, and I'll advise you to look out for it, because a trend will not continue forever. So some people may want to keep looking out for more and more points downwards. That's if the trend keeps going. The 1.6 and the 1 are not the only points. You can see there is the 2.6, there is the 3.6, there is the 4.2. So this will happen if they are going to hold the trade longer. For swing traders, they can continue doing that because they can hold trades for months. But based on this, okay, if you can hold longer, yeah, and if the trend will continue, but the trend will not continue forever. So don't be greedy in trading. Once your risk to reward ratio is more than 2 or more than 3, then you should exit the market and wait for another opportunity. Don't be too greedy. It does not happen like that. That trend must continue to occur. Even when it occurs, it may go back and hit your stop loss before going that direction again. Now, if you have any question, let me know in the comment section. And also, I have a free WhatsApp group that you can join, and then you will learn everything regarding trading there. I also give trade signals in the group. The link will be in the description box. Do have a lovely day. Bye.